Welcome to episode 6 of the I Know First Weekly Market Review. Today, we're going to talk about Trump's tariffs and how they will affect the market, how our algorithm is forecasting the market to turn out after these tariffs are implemented, and going over one of our strategies we use for our institutional clients. This weekend, Donald Trump announced he will be implementing tariffs on all goods from China, Mexico, and Canada. This will have a big effect on companies who rely heavily on resources and goods from China, as well as a big effect on the consumers who will have to pay a premium on goods shipped from China. We know history often repeats itself, and therefore we can learn from what has happened in the past. Back in 2018 and 2019, with the trade war with China, the Nasdaq, S&P 500, Dow Jones, and the Russell 2000 were deeply affected in the following week after the tariffs were announced. Our AI algorithm sees very similar results for this coming week. We see increased volatility in the market with the VIX and the VXN having a high signal and are at the top of the table. We also see negative forecasts in the short term for all four of these indices. Which sectors will be hit the hardest? In the past, the consumer discretionary, materials, industrials, energy, and information technology sectors have gotten hit the hardest. Not only does our AI forecast high volatility in the market for the next week, but we also see that it doesn't have good forecasts for these 5 level 1 sectors. However, we do see that there will be certain stocks in these sectors who stand out and will outperform the market. Lastly, it's important to note that this is for the short term, and we still see positive results for the long term because it has a much higher predictability. Now, shifting a little bit, I Know First does many different things. Not only do we give daily market forecasts to our retail and institutional clients, but we also develop AI-based financial products with leading investment houses. On the right, you can see an example of one of our high-performance strategies, where it beats the S&P 500 by a margin of 154%. This strategy is only one of many that we produce and provide. Before we go further, we need to make sure everyone knows about the GICS Level 1 and GICS Level 2 sectors that the market is composed of. The GICS Level 1 sectors are the main 11 sectors that the market is made up of. These include energy, materials, industrials, consumer discretionary, consumer staples, healthcare, financials, information technology, communication services, utilities, and real estate. Then we have the GICS Level 2 sectors. These GICS Level 2 are all subsectors of the GICS Level 1. So every single GICS Level 2 sector falls into one of the GICS Level 1. For example, the XSD, which includes the semiconductors, is a part of the technology GICS Level 1 sector. So in short, the GICS Level 2 are subsectors of the GICS Level 1. The strategy we will be talking about today is the GICS Level 1 sector strategy. The way this strategy works is it takes the quantitative data from the entire market and it goes into our artificial neural networks, and then based on the forecasts our algorithm gives us, we focus and take the most predictable sectors. The 3 sectors with the highest predictability are the sectors that get added to the portfolio. Each sector can get a maximum of 25% of the portfolio, and the percentage that's left over goes into either the SPY or S&P 100. Here's the performance of the strategy since 2020 compared to the S&P 500. You can see we outperformed by 57.7%. Now, a similar strategy that is very popular is the Shiller strategy, which also focuses only on the GICS Level 1 sectors. The differences between the two strategies is we use only AI to pick the best sectors, and we only pick 3 GICS Level 1 sectors, while Shiller picks 4. You can see that both the I Know First strategy and the Shiller strategy are beating the S&P 500, but the I Know First strategy outperforms. Ultimately, this is only one of many strategies that I Know First has to offer. Thanks for watching, make sure to like and subscribe, and here's to smarter, AI-driven investing. See you next time.